What's up, everybody? Michael Silva here with Coco. You're watching episode 14 of the Weekly Scan.
The Weekly Scan.
The Weekly Scan is all about finding opportunities in the stock market for the weeks ahead. In today's episode, we will be using technical analysis to review 10 different stocks. Now, as for a quick disclaimer, these videos are for entertainment and educational purposes only. If you do not have experience investing in the stock market, day trading, swing trading, whatever it may be, please ignore our opinions. With all that said, let's go ahead and hop into today's show. Yeah. All right, everybody, welcome to the computer. Let's go ahead and get into it. We're gonna first start off with ticker symbol CNX. And right out of the gate, this is what I see. I see a strong area of resistance that is now acting as support at this $9.30 level right here. Now, we did see a nice big breakup at this point from down at 455 to 419. And then it's been kind of this trend down lower. Now, as you can see, it's kind of a bull pennant, or you can call it a descending triangle. I'm going to call it a bull pennant because of the fact that we broke out right here. Now, we broke out. It's not that much volume per se, but it is more than the previous days. But you can also tell that there was volume accumulated right here, which is kind of like, interesting, right? And it didn't move much on that specific day, which is right there. So it's been accumulating volume. The RSI indicator isn't showing us all too much. It's not overbought. It's not oversold. It's just right there, middle of the pack. If you look at the MACD indicator, it does look like it wants to start crossing over and start spreading to the upside. It does look like it is above zero, so that is a good sign saying that we might see a trend change here. So we had this big bull pull and we had to consolidate. How far can we see this go? Well, typically when you see breakouts like this, now this is just an estimate, but people do say that you can take the length of the pull and then put it out to where it broke out. So you can go from, basically $5 to $15. So give or take a little bit. So say it could potentially move $9 from this point. Now that's not necessarily going to happen. So let's just go ahead and kind of map out where there could be some resistance. Now there could be resistance at this 1130 level right here. And the reason why is because if you look back in the chart, it's also kind of acted as resistance here and then support, and then it broke down and then it acted as resistance. So you might see some resistance there in that point. But this overall is looking pretty good setup. I would play it kind of like this. I would kind of hope, well, it really depends on where it opens up Monday, but I would want to open up a little bit, buy in a little bit lower to potentially have a target set at around 1350. As you can see, maybe a little bit lower than that, probably right around in this range, which is 13 bucks. Yeah, so it's about $13. But if you can capture some profits in right throughout this range, and then potentially your reward could be right around there, that makes for a great risk versus reward trade. And then I would just have a stop loss, pretty much just right under the 50-day period moving average, which is at $9.70. So maybe $9.65, which would also put it below these two candles right here and here. That's what I have for you on CNX. Let's move to the next one. All right, here is HL for Helcom Mining. This one is an interesting play. You might need to be a little bit more patient on this, but a big level that stands out to me is from back in the chart all the way to here, which is $2.80. As you can see, it had resistance here, and then it kind of came up, almost tested as resistance, and then resistance throughout here, and then you saw that big breakout. And now what you're seeing is a kind of a consolidation, a pullback from 365 down to where it closed here, which was 318. Now, the candle that formed is interesting. It's a hammer candle, which is nice because you might be able to see a reversal. However, take it into its context of what took place. This was a big gap down. Okay, that day was a gap down. It pushed lower and lower into the 20-period moving average and then moved itself back up. So the question is, will we see a bounce back up to this 350 sort of high, 360 high right up here? Or will we see it potentially come back and retest this level at the 228? I personally would want to be a little bit more patient in order and get in shares right around here and then have a stop loss below the 280. But I can see if you would want to enter in right where it is, depending on where it opens up Monday, because as you can see, it's kind of held on this green line, which is the 20-period moving average. It's acted as support kind of throughout that range, so it might continue to do so. Very possible. Another thing that you want to point out is kind of just been in this bull channel just to the upside. So as you can see, it's kind of been just within this channel, and now it's at the bottom portion of this channel. So if you did enter in here, you can basically have your stop loss just below the channel, because if it breaks lower than that, then you could just be like, okay, now I'll be patient and I'll wait for that 280 level to take place. That's how I would play it. So if you wanted to, like I said, enter in right away, right in here, potentially get some good upside, that's awesome, and then you can have a tight stop loss. Or you can be like, I think it's going to break below, and then I'll just be patient and wait for it to hit this level, and then have a tight stop loss under that. Let's move to the next one. All right, here's ticker symbol PAAS for Pan American Silver. There's some good mining company opportunities here. I am bullish the miners in the long term. They are pretty volatile, and we would expect to see some pullbacks. Now, we did see some pretty decent sized pullbacks here in the last couple of days. As you can see, it was at 30.59, and now it's down. It closed at 25.80, so pretty decent pullback in a short period of time. This is very similar to the other chart, actually. So you can see that there's clearly areas of support / resistance right here at this basically 22 level. It acted as, resistance, and when it broke through, it kind of made up and then went a little bit higher, and we might be seeing that pullback to maybe move higher. However, that's how you can play it. It's another one that's within that bull channel. Boom. Boom. It's made some very aggressive moves in these past 3 months. As you can see, it had a low of 10.59 all the way up to $30. So it's been making some pretty huge moves. Now, what you can do is you can technically enter in shares right in this area and say, I'm going to be playing this bull channel for the long term, and I'll just have a stop loss that moves as the days go by within this channel. Or you can be like, I think it's going to break through this channel. I'm going to go ahead and pick up shares at 22 in this area and have a tight stop loss from there. Both ways you can play it. It just depends on your risk tolerance. So let's move to the next one. All right, here is CDE for Coeur Mining. I don't know if I'm pronouncing that right, but once again, here's another mining company. Very similar. They're all kind of, moving the same way. And as you can see here, it was another kind of bull channel that was taking place. Boom, and then from down here to $1.98 all the way up into this range. So you can kind of see it's been trekking within this channel. As far as like a pretty prominent area of support and resistance, I'd say it's at 425 level right here. So it acted as a support here and then resistance here, and then it's kind of just went sideways and then finally crashed through, acted as resistance, and then finally bursted above it. So like I said, you can be patient for this break and get it more down here by the 50-day period moving average, and then have a tight stop loss after that point. Or you can just enter in shares here and say, I think it's going to be going higher from this point up to the upper part of that channel. The RSI is not giving us much information. This MACD is not giving us too much. It crossed over, which is bearish, but keep in mind that could change fairly quick. It's a lagging indicator and it's still above zero. And then we have a nice hammer candle that formed. So obviously you have that pullback, and then you have a hammer candle, which could be potentially a sign that a reverse is taking place. And it happened to be right at that 20 period moving average as well. So I can see both ways. Now, if you enter in shares here and you're like, okay, and I'll just continue to enter shares down here, that is also another play, because you might be long the position where you might think that it's going to be going significantly higher in the future, where that would make some sense as well. But keep in mind, like, you got to play it as how the chart says, like what can potentially happen. So clearly there's resistance at $6. Okay, so if you enter in throughout this whole entire range right here and have a stop loss here, you'd be risking all of this to just basically potentially earn right here, would be the realistic by looking at this chart. Now, it might go way higher, but you got to understand risk versus reward. You don't want to do a lot of risk for a little reward. It doesn't make much sense. So if you were to do it, you'd enter shares here, have a stop loss below the trend line to potentially get it up to that $6 level. That would make sense. And then if you get stopped out, you might be like, okay, now I'm going to enter in down here and have a tight stop loss below this 425 to potentially see it come back up to $6 as well. That would also make sense. All right, on to the next. All right, so here's ticker symbol GPOR for Gulfport Energy. I just kind of noticed that there's this pretty prominent area of resistance and support right here at about $1.80. And it's kind of been tracking up a little bit with the 50-day period moving average. Now, it looks like it just is trying to get over this 20 period moving average, which is a good sign for potential trend reversal. We did have this kind of bear pull that pulled down. However, it's kind of an ascending triangle. So keep a couple things in mind. So the RSI, you can ignore that. It's not telling us much. The volume definitely is telling us something. It's telling us that potentially volume is accumulating because they want to see a break above 180. And then also you have the MACD kind of losing itself, the momentum to the downside, looking like it wants to start crossing over potentially to move higher. So there's a couple things saying, hey, we might see an upwards pop out of this $1.80 level. So how would you play this? Well, it would be nice to pick up shares a little bit more further down here and then have a tight stop loss. Or you can play the breakout. Depending on really where it opens up Monday, you can play right here and speculate that the price is going to break out. Or you can just simply wait for the breakout, and then you can be like, okay, I'm going to wait for the breakout, and then I'm going to enter in, and then I'm going to have a stop loss, or I'm going to have a stop loss below this $1.80 level at the trend line. So you're basically picking up shares here, stop loss is there, and you're playing it to hopefully, come back up to this level and retest it. Now keep in mind there's some overhead resistance with the 200 period moving average. That's at basically 206. So you'll probably see overhead resistance at $2. Now, keep in mind, from $1.80 to $2, that's a pretty large percentage point gain. So either way you look at it, it doesn't look like a lot on the chart, but you can make a lot of money on this, and you could lose a lot of money on this. So I like this setup, looks pretty good. My personal opinion, I would just like to see the price come down lower. It would be nice for me, and then I would have the stop loss below that, probably the 50-day period moving average or right under this trend line, and then I would expect a breakout to take place. That's how I would play it. However, it just depends on what takes place Monday, because Monday it might open up here, or it might open up down here, and then I would basically say this trade is worthless. Let's move on to the next, which we're going to do right now. So let's go to the next. All right, here's ticker symbol TTOO for T2 Biosystems. This is somewhat of an interesting play. You need to be patient on it, and it's, really quick. This is going to be a fast one, but clearly it acted as resistance right here at 99 cents and then 98. And then it came down. Obviously, there's a lot of momentum to the upside, came all the way down to back to the dollar level, and then bounced itself back up. So I'm wondering here, it's kind of consolidating nicely throughout this range with, obviously a nice momentum to the upside. So if the price can come back down to $1, it would present itself a good opportunity for a good risk versus reward. But that's about all I would do to enter into this. The RSI indicator is overbought, so you might be seeing that pullback take place. But yeah, like if you can enter in at $1.01, say, and then have a stop loss, at 95 cents. That's you're risking 5 cents per share to potentially see an upwards move back to $1.31 or even potentially even higher. So that's how I would play this one. That's TTOO. On to the next. All right, so here's ticker symbol RH. This kind of reminds me of the Disney setup I talked about not too long ago. I don't know if it was on the weekly scan or something else, but just look at this level here at the 220. Right there, you can see how the price kind of acted as resistance, and then instead of trying to get through the resistance, it just gapped above it. That's sometimes what markets do. Then you have this big reversal candle that took place, and then you have another big red candle that took place here. Because the RSI is overbought, you might be seeing that pullback. And when a pullback happens, you might get that window to be closed and then potentially see the price move up. So if you can be patient and wait for it to come down to that 220 range, and you could maybe pick up some shares here and have a tight stop loss, you might be able to witness a pretty nice bounce. Now, this is a pretty fast-moving stock. Look at this day alone. It had a high of just over 260 and a low of 235. So from 235 to 265, that is very volatile. That is a lot of movement in a single day. So if you do capture shares down here, give yourself some wiggle room as far as stop loss goes, and this could be a very, very profitable trade if it does play out like this. Let's go ahead and move to the next one. All right, here is ticker symbol Boeing. You guys probably know if you watch my live day trading on Webull, I do I trade Boeing pretty frequently. And this right here is just looking like the price action is really slowing down. And I feel like a lot of investors are going to be taking their shares off the table. There's a couple things that make me think that. One, RSI indicator now just moved into overbought territory. Keep in mind the RSI indicator doesn't mean it's just going to drop back down to reality. It could stay here for months, okay? That's the reality. It could happen. However, when you look at the candle that took place, it is an indecision candle. Notice the long upper wick and the very small body. So this right here is basically saying to me that a lot of people started buying into the hype and momentum, okay, and getting trapped, and then the price pushes itself all the way back down to basically where the price opened. So this, to me, there's a lot of people that are trapped in this upper wick, which is probably pretty scary. So if it closes below this level of, I would say, 197, you can see a downwards move a little bit more aggressively to come back to reality. Now, where can that be? Just down to this candle right here to close the window is $1, it's 190. So if literally it's at 205 to 190, right? So it depends on where it opens up Monday, but that's a pretty big move. That's a $15 per share move just down to this candle. Now, how would I play this per se? Now, it really, like I said, it depends on where it opens Monday. I would like to get shares a little bit higher to short, okay, at the 220, 219 level, and then have a tight stop loss after that point. Because if you look back in the history of the chart, there's clearly areas of resistance within this range. So it acted as support, broke through, then it acted as resistance here. So if the price comes up, I can have a really tight risk versus reward right here to potentially see a move down to the downside. And then I would take profits as the time moves down, because this could come all the way back down to, you know, let's say $1.54 or $1.50. Like, that's a very possible situation where you can see it, you know, it acted as a support here, and then it acted as, you know, it broke through, acted as support, or then resistance, 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 resistance. So that 150 level could be a very keen level for potentially getting out of the short position or then reversing it. So if you go short up here and then you can go long down here, you can just play, you know, a pullback. So or like I said, if you want to be very patient, you can be like, okay, I think it might come down to 150, 160. So I'll be picking up shares down there and having a stop loss below that. Just depends on where it opens up Monday. But yeah, good short opportunity, I think. Just be careful because you have to be very aggressive on shorts. Another thing about the airlines, notice how it went up 12%. So that's what's kind of misleading, is if you look at the other airlines such as Spirit Airlines, American Airlines, you'll notice that they had these big, huge days that gapped up just like this, but yet, so they gapped up and then basically just headed lower and lower and lower and lower throughout the day, which is very bearish, but it looks to an average investor as bullish. The ones that are looking at line charts, okay, they just see it move up and they don't see the price action throughout the day. So just keep that in mind. That's why I'm saying this is a good short opportunity. Let's go to the next one. Here is ticker symbol DENN for Denny's. All American Scramble, baby. Here we go. So I don't know if I called this one out on other charts, but I was talking about the breakout. So I just want to point out the breakout around $12. It broke out, okay? It acted as resistance here, resistance, 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 and then finally broke out. So now when resistance is broken, it then becomes support. As you can see, the day that took place, the last trading day, it was very bearish looking candle. As you can see, it opened way up here at $15, a big gap up, and then pushed itself lower. So I think we might see some more downwards momentum to this $12 range. So I would say, hey, set an alert here at $12.15 or $12.05 or something like that. And if we can get a pullback down to here, we might see a bounce from that point. And it sets itself up to be a good risk versus reward trade. And what I mean by that is you can enter shares here and have a tight stop loss underneath that wall of support. So that's how I would play it. A couple things on the indicator. The indicator is still nicely moving up as far as the MACD goes. And then you have the RSI a little bit overbought or about to move into overbought territory. And that's why you might be seeing that pullback or some people taking profits off the table. Cool. Let's move to the next. All right. So this is the last stock we'll be talking about over here at FB. This is Facebook. What I'm kind of seeing is somewhat of a bull pennant take place within a bull channel. So really, here's the pattern that I see. Boom. It looks like that's the pull. And then you kind of have somewhat of a, you know, making somewhat of lower highs there. So you're kind of seeing this bull pennant form, and you might break out to the upside of this trend. So, and then overall, it's in somewhat bullish context, and you see it kind of within this bull channel taking place. So it's possible that this right here can be at the bottom of the channel. You can have a stop loss at that 220 or 219 and play it as it might break out to the upside. I wouldn't get too levered up on something like this because it is volatile and can move quickly, but it does look like it's kind of prepping itself for, you know, a breakout or potentially a breakdown. The last trading day, it was a green candle, so it's nice. It's a nice little setup. I'm going to be keeping an eye on it, but when it does break out, or if it does break out, you want to see it on high volume, because if you do see the breakout on high volume, it gives you more confidence knowing that you might see a move higher. Keeping in mind also, so you have the MACD kind of crossing over here. It's not below zero by any means, but just it's something to take note of. It's kind of, you know, kind of curling down, and then the RSI is kind of in the overbought territory. It's kind of moving up there. That doesn't mean it can't last here forever and that this can't turn around, but it's things to take note of. The only thing that we have complete control of in the markets is risk. I say that often. So yeah, that's where I'm going to close it off. That is the weekly scan for you. We went over a lot. Hope this helps out. Just another disclaimer, just be careful going into next week. There was a lot of volatility on Friday. There's some important data coming out next week. So just be aware and cognizant of what you are risking. That is the only thing we have control of. So you might as well be very, 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 very good at it. All right, everybody. Thanks for watching the weekly scan. I will see you here next week. See you later.